Hello there. It is later than I thought it would be when we're doing this live, but here we are. We're doing it. I was chatting with a client today about I was suggesting that it was time for the company to be incorporated, and so we were talking about shares and share structures and how all that works. And I mentioned what's called a kiddie tax, and my partner giggled a little bit in the background. So live topic born. Here we are talking about it now. So what we're talking about is this idea of, it used to be that you could have, you can incorporate and you could have your spouse have shares and your kids could have shares, and it was a really effective way of splitting income. You could give your kids dividends, and they're taxed at almost, like they're taxed at a really low rate, right? Because that would be the only income that they have. And so the government shut that one down. So you cannot pay out dividends to shareholders that are your children that are under the age of 18, because you trigger this kiddie tax, which means that the tax on those dividends are going to be at the highest tax bracket. So you have not, in fact, saved money. You're going to pay out the highest amount of tax that you would owe, even if you took it yourself. So that's not a thing anymore. It used to still be, until very recently, the last couple of years, where you could have your spouse be a shareholder in the company. They didn't have to be a part of the operations. They could just be a shareholder. And that was a way to split income as well. And that was used primarily by people who had stay-at-home partners. So they had a one income household, and they tried to split the income of the company between the two of them. And it was super effective in reducing taxes, because you now have two people that are taking this income instead of just the one. So you'd end up paying tax at the lowest tax bracket for as much as possible. A couple of years ago, the government said, nope, none of that. And they introduced the commonly called the TOSI rule. It's actually a tax on split income. And so it's now the same sort of thing as a kiddie tax, where if you pay out dividends to a spouse who is not actively working in the company, then it's taxed at that highest percentage as well. And so they've really closed the loop on that, or closed the loophole on being able to split income with your spouse in that way. If your spouse is working in the company, then absolutely they can be paid out dividends, but this stops the tax avoidance method of just sending dividends to your spouse that's not working. There are lots of tax planning opportunities still within a corporation. So if you have any questions about that, definitely leave them in the comments. And if you have any questions about the tax on split income rules or the kiddie tax rules, leave those in the comments too. I will either answer you because I just know, or I'll look it up for you. Either way, you'll have an answer or a place to look for your specific answer, because sometimes it's tough to get into the details. I hope you're doing well, and I'll see you tomorrow.